Because Tariff Liberation Day was a shock, and it created a downward spiral in stocks, falling 20% in the fastest pace, or one of the fastest pace in 100 years. There have only been 12 times in history that stocks fell a similar amount and a similar speed. And I think the mistake many people made was that shock turned people bearish. As you mentioned, we did think there would be a correction this year, but the reason I think we didn't turn bearish, even though this was a huge decline, is three things. One, we didn't expect President Trump to stick with the tariff terms. So even though in the beginning they claimed this was the deal and everyone had to take it, we thought they would eventually walk back those terms, which is what's happened. And in fact, what we've seen so far is the tariffs are much, much milder than many people thought at the start of the year. So we're actually in a better place. The second is many economists convinced you that there'd be a recession. Do you remember in the audience, you guys are still bearish, thinking, I don't see why stocks came back. So I don't really want to buy the stock market now. But here's something to keep in mind. In 2025, we've already had a 20% decline. The chances of a 10% decline between now and year end is very low. It might even be over the summer because of tariffs. That might kind of make sense. I mean, I'd say if someone said that to me, I'd say I understand that prices should be going up because of tariffs. But that is not actually how monetary policy should be administered. The Fed is really supposed to overlook supply shocks. So if you have a supply shock, like a tax, and it causes a one-time rise in price, the central bank is not supposed to adjust monetary policy for that, because the Fed is trying to control demand, meaning if there's so much demand for something that it causes prices to go up, they try to tighten monetary policy. But because of tariffs is more like a supply shock, the Fed should actually look through it. The bond market is starting to make that conclusion. On Wednesday's FOMC meeting, the bond market disagreed with the Fed. Interest rates actually really been our stance this year. But with the Fed cutting rates next year, I think that's going to be good for interest sensitive. So that should really support financials, and it should support small and mid caps.
Your call early this year was industrial, financial, tech, and now tech is finally picking up. And you continue to believe that cyclicals will do very well as the tech in the environment that would be more inducive by the monetary policy. Let's move on to stock. I think in this audience, we have quite a lot of people who have been holding on to Tesla. I think one of the lady here, she has been owning the stock for 11 years, and Tesla, I think there's a lot of upside, but also has a lot of volatility.
With full self-driving, it is strengthening the capabilities of their artificial intelligence. They might even integrate Grok into that. And now they have Optimus Prime and robots. And they are, by a country mile, leading in the US in terms of robots. There was companies like Boston Dynamics that was working on these things a lot earlier, and Tesla has already surpassed them. So if you ask me, Tesla represents a company that knows how to take technology and then turn it into real world products. But they're now at the intersection of everything that's important, because Tesla is linked to Starlink and to space and to Neuralink and to the Boring Company, all the things that Elon Musk is doing. And I think that that's the second part of the story, that we know if you look at the last 100 years, the stocks that changed the world were really led by a founder that did see the world differently. So I think Tesla, as long as Elon Musk is involved, is unsustainable. But here's the thing. When I started on Wall Street in the 90s, that's also what I heard on Wall Street. I remember our economists and our bond heads of fixed income saying the US is on an unsustainable path for debt. And that was 35 years ago. So for the next 35 years, you're going to hear the same thing. The US is on an unsustainable path of debt, yet it's probably not going to make a difference. That's my opinion. But I do agree that we're in a very strange world because the US prints money and they print a lot of dollars, and yet the borrowing cost is really low. It's very mysterious to me, but I don't think today's levels represent any sort of break point. And here's a really simple way to think of it. One, dollars is the reason people have used. It's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today. If you look at Bitcoin wallets, comparing it to the internet, we're back to 1996 levels. Internet went exponential from 1996. So it's still the earliest days. I think Bitcoin is very useful because in the future, we're not going to be able to trust anything because cybersecurity, there's nothing secure anymore. We can sample your voice. I mean, even someone takes our voice, translates into Korean using my voice, you'll never know what's true anymore. So you need to be able to trust a system. The blockchain, the Bitcoin blockchain is the most trusted blockchain. And that's why the United States wants to have 1 million Bitcoin. US company, very efficient. And nuclear has what I consider an arbitrage benefit at the moment because, as you know, prior to 2024, countries were trying to dismantle their nuclear power plants. So, Germany closed all of its nuclear power plants. And I remembered thinking what a mistake that would be because nuclear is quite clean, but it got a bad reputation because of Fukushima and also the ESG movement, environmental, social governance. And as a result, the intellectual property of nuclear power has been lost. People
Take a closer look at this, how the performance has been. Can you give us some tips? What's the best way to trade this ETF?
Well, the Granny Shots ETF is Fundstrat's research portfolio. If you want to buy our best ideas, in one ETF, you have our 35 best stock ideas. We made this available to the public in November 2024, and in 6 months, it raised $1.2 billion, which is the fastest ETF to reach $1 billion for an equity ETF in over 20 years. Now, the reason investors want to have exposure to Granny Shots ETF is that it's our research portfolio, which we made only available to our...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.